Hey everybody, today we're going to talk about tax grievances, and I'm here with the specialist. Why don't you introduce yourself?
Hi, everyone. I'm Michele LaGrassa. I'm with Heller and Consultants Tax Grievance. Thanks, Mo.
Very welcome. Thank you for being here. All right,
It's
so
my pleasure.
what is a tax grievance and how does it benefit homeowners?
So, a lot of people are unaware that the process of tax grievance even exists. Some that do know about it are, taxes can be a scary subject. So, very often homeowners don't want to do anything about it because they're afraid, what happens if they find out I'm not paying enough? Will they raise my taxes? So, there is nothing to be afraid of. It's actually a great tool for homeowners to help them keep more of their hard earned money. It can never hurt to file a tax grievance. A tax grievance is basically a complaint that your property tax assessment is too high. So while a tax grievance does help to reduce your tax bill when it's successful, it's not an actual argument of your tax bill, it's an argument of your tax assessment, which is the value that the town is taxing your home for.
Okay. And obviously it's to save money. How long do those savings actually last usually?
So that's a really great question. I will tell you that I specifically work on residential properties in Nassau County and in Suffolk County. In Suffolk County, they do not reassess. The towns don't reassess. So once you have a reduced assessment, it basically stays with the property indefinitely. So the assessment is a number that is multiplied by your tax rate and generates your tax bill. So your tax rates can change and they usually do increase a little bit. But once you reduce your assessment, your tax rate is basically forever based on a much lower number. So, of course, the calculation is going to come out to lower. So, you're basically saving forever. And as the tax rates increase, your savings actually grows. In Nassau County, the county and the towns, they can increase your assessment legally by 6% a year or 5% over 2 years. We are seeing Nassau County increasing those assessments year over year. However, once you have a reduced assessment, that increase, that percentage increase, again, is still based on a lower number. So you are, again, seeing the savings indefinitely until eventually Nassau County will reassess the entire county again in either 2028 or 29. And we'll see what happens at that time. Without a crystal ball, it's tough to know, but the savings will continue indefinitely until at least that time.
Okay, that's good. So it's not something that has to be renewed constantly or okay.
Well, I'm glad you said that actually, because we do encourage homeowners to apply for a grievance every single year. Um, because assessment, there's a variety of factors actually that can change from year to year that impact your taxable market value and therefore your ability to qualify for a reduction. So even though your assessment doesn't change, as I previously just said, there is potential that you could reduce it even further in the future. So we do tell everyone apply every year. If we reduce your assessment 1 year, that doesn't mean that we can't reduce it again in the future, even
Okay.
further.
Okay. Let's talk cost. What are the upfront costs?
So it depends on who you work with. Obviously, our company, we don't charge any upfront fees at all to start a tax grievance process for anyone. And also, there's no fees at all if we don't actually save the homeowner money. So
Okay.
one of those things that it's really, there's nothing to lose by trying. We literally say nothing to lose by trying. So no upfront costs, no fees at all if we don't actually reduce your tax assessment.
Okay, that's great. So let's say everything's successful. What are the fees then?
So typically it's kind of an industry standard. It's usually half of the first year savings, depending on obviously how much we save. I mean, there's some astronomical reductions that you would be shocked to learn about. But generally speaking, half of the first year savings. If the cases go to court, the court charges a $30 filing fee that we pass on to the homeowner. So there are some fees that would get passed on, again, if and only if we're successful.
Okay.
Generally, if we saved someone $1,000 a year, the fee is going to be half of that one time. And then they continue to realize the savings, but there's no fee again unless they apply again. And if we reduce their assessment further, the fee would be based on that new additional savings.
Okay. So basically, the fees which come out to less than $100, and then half of the savings for that year that it's done, right?
So that's another good question. So to be like, there's a little bit of a difference between Nassau and Suffolk County. So Nassau County grieves into the future. So right now in Nassau County, any applications that are submitted before the deadline will be effective for the 2026-27 tax year. So they'll see an adjustment to their future tax bill and they'll know that their assessment has been reduced. In Suffolk County, any applications that are received before the Suffolk deadline are actually effective for this second half of 2025 and the 26 tax year. But these cases won't be resolved until early or the first half, let's say, of 2026. So Suffolk County homeowners do wind up receiving refunds of whatever they overpaid from the time that the grievance was effective. So they'll either see a credit on the next tax bill or they'll actually receive a check as a refund in Suffolk County.
What are some misconceptions that people have about tax grievances?
Oh gosh, so many. So first is that your taxes can be raised because you filed a grievance. That's what I was mentioning earlier, that a lot of people are afraid of that. It is against New York state law for them to increase your taxes because you filed a grievance. So if you file and your tax assessment is fair or even low for the value of your property, you're just lucky and that's it. There's nothing that can be done. And we'll say try again next year. So that's one misconception. Another very common misconception is that you can only grieve your taxes every other year. That is not true. You can and you absolutely should grieve your taxes every year. And by the way, I'll mention this, homeowners that do grieve their taxes every year pay on average 25% less than homeowners that don't grieve every year. So it's important to just grieve every single year.
It's considerable.
Yep. So where that misconception of every other year comes from, though, is that in Suffolk County, if your case is won in court, which 99% of all grievances are won in court in Suffolk County. If your case is won in court, the court will not hear your case the following year. The reason we tell everyone apply anyway is because if you have a case in court waiting for a court date and you wait for the results of that court case to apply again, you will have absolutely missed the following year's deadline. So we say, don't wait, just get it in. The worst thing that happens is you're actually successful in court and they just put your case aside for the following year. So it's called a 1-year moratorium in Suffolk County. So you can't win in court 2 years in a row. So that's where a misconception comes from, that you can only grieve every other year. That's not true. There's also a misconception that a lot of people think that if they've never grieved their taxes, they're automatically going to receive a 25% reduction. That's not true either. Every home is different. There could be 2 homes right next door to each other with their exact same home. They could have completely different tax bills. And there's a chance that I'm going to say that the one with the higher taxes may not even qualify. So they can't use their neighbor's tax bill as an argument for a reduction. That does not work. So that's not how it works. So a neighbor's tax bill is not an indication that you're overtaxed. It doesn't mean that you're going to qualify for a reduction. So that's one of the things that people think, my neighbor's paying less than me. So that's not always true either. And then with regard to the 25%, where that comes from is that is the maximum reduction that the town or the county has to allow in a single year. So if a property qualifies for a 35% reduction, it's possible that they'll only be granted 25% of the current assessment, which is roughly 25% of the tax bill. So that's kind of where that misconception comes from. It is the maximum reduction that the town or the county would need to allow in a single year if the property qualifies for more than that.
Okay. And then they can just reapply for the next year. So.
Yeah, exactly. I just say reapply again. There could be potential reduction for even further reduction, but the property would need to qualify again in that following year. So if there's a dramatic change to the real estate market, they may not qualify anymore, but certainly, usually they will, and they can see that reduction again in the future.
Okay. On average, how long does the grievance usually take?
I tell people, I used to always say about 12 to 18 months. Now I'm saying probably more like 18 months. Of course, it depends on when you apply. If you apply the day after the deadline and you're the very first person to apply for the following year, you're going to wait, 18 to 24 months, but if you apply right before the deadline, you'll probably wait closer to the 12 to 18 month time period. It is a lengthy process. Like I said, in Nassau County, it doesn't matter if you're in before that deadline, your grievance is effective for that same time period. Suffolk County, same thing, you're getting a refund. But usually in Suffolk County, especially because we're waiting for court dates, that's what takes the longest. We apply, the town and the county, they have 90 days to respond to the grievance, which in Suffolk, it's always going to be a denial. We then have 30 days to respond to that denial and file an appeal. And then that appeal process and waiting for that court hearing, that's what takes so long. So people will apply for a grievance and then call me a week later and say, what's happening with my grievance? I'll say, nothing. It's like, hurry up and wait, basically.
Let me ask you this. So somebody applies for a grievance with you guys. you guys pretty much handle everything for the most part, right?
Yeah, we do. We handle everything. Once we receive an application from someone, we then handle all, the initial filing. We handle the review. We do a desktop appraisal. We're doing everything we can to build the best case possible because obviously we're not getting paid unless we're actually saving the homeowner money. The more we save them, the more we'll earn. So we're really doing our best to earn the largest reductions possible that we can for every homeowner. We do go to court. We file the court appeal. We do all the hearings in person. So once we have an application from someone, really there's nothing else that they need to do. If it's a commercial grievance or something a little more involved, we do need to ask for some additional information throughout the process. But, generally speaking, we're handling everything from beginning to end for them.
Okay. When a homeowner wants to do the grievance with you guys, what sort of documents do they need to provide or info do they need to provide to you?
This is so shocking to so many people. It's actually their name, their property address, their email address, and their telephone number. And then they'll use an electronic signature. That we don't need tax bills or anything like that. It really is a super simple process that probably takes less than a minute to complete. So there's not a lot of information that's needed. We have access to all the public records and everything like that. So it's really super simple on the homeowner's end. There's nothing that they need to provide really besides basic contact information and their address.
Okay. Yeah, it's pretty simple.
Yeah, very simple. People are
Yeah,
shocked. They'll
we
complete
should
it. They'll
definitely do that
be
every
like,
year then.
that's it. I'm done. Yeah, we make it easy.
So, what are the potential outcomes for a successful grievance?
So that's a good question. A lot of people ask me, what's your percentage of your outcome on successful grievances? And it's difficult to say because we do also encourage homeowners to apply every year. And there are many homeowners that just submit applications that in no way, shape, or form would have a case for a reduction. So every home really is different. And like I said, mentioned earlier, the example with two homes that are next door to each other, that one might have 16,000 in taxes and one might have 12,000. And the one with 12,000 might just be significantly under assessed. And that doesn't mean that the home with 16,000 in taxes is overassessed. So every single home is different. So I encourage everyone just apply every year, have it looked at, or at least get it checked. When it's not the crazy busy time of the year, I can look at any home for anyone and really just give them an idea of whether or not they might qualify. Many times I can give them an estimated reduction amount. As we get closer to the deadlines, it does get a lot more difficult for me to have the time to look at every request that comes in. So I tell people just apply and get your applications in. But every home is different. And there's really, I try to, if I'm giving an average savings to, if I said for every home application that we get, what's the average savings? I'll say $2,500 a year, maybe in savings. But there are some that we save $600 and we actually do hold the record. You'll be shocked. I mentioned earlier for some of the reductions that we win. I think it was last year, we beat our previous record for the largest reduction on a residential property in Suffolk, which was, I think, about $17,000 in savings. Now, last year, we had a reduction that was over $29,000 a year in savings. In Nassau County, we hold that
That's
record.
1 year?
1 year. Yeah,
Okay.
$29,000 a year in savings. Obviously, these are, very expensive homes, that have high assessments, but you'll be even more shocked if that shocks you. In Nassau County, the largest reduction we won on a residential property was $73,000 a year in savings. So there is a lot of money out there that people don't realize they're overpaying on their property taxes. So many homes are overassessed and the homeowner just has no idea. And a little tip, because very often it's those homeowners that have a lot of exemptions and they feel like they're not paying very much, so they don't grieve their taxes. Like if they have a veterans exemption or a senior enhanced star exemption, really they do have some pretty significant savings on their taxes. But what they don't realize is an exemption is attached to the person that lives in the property, right? They either qualify or they don't. A grievance is about the actual property itself. So homeowners should be applying for any exemptions they might qualify for, and they should also be applying for grievances so that they're paying even less. They're paying as little as they possibly can, and definitely not paying more than their fair share, especially when it comes to a property tax grievance, because if you qualify, and that means you're paying too much, you're paying more than your share. So a grievance just helps ensure that you're not paying more than you should.
Okay, you just kind of read my mind because that links up to my next question.
Okay.
So recently I just had a file where the taxes listed were the taxes that the homeowner was paying, but they're a vet.
Okay.
And
Yeah.
that obviously doesn't pass over to the new buyer.
Correct.
And then same thing, with the star, they need to reapply, blah, blah, blah.
Right.
With the
So
tax grievance, if somebody does a tax grievance and then they go to sell their house, does that pass on to the new owner?
100%. So that's exactly what, when I'm working with a real estate agent or homeowner, I let them know if you have a lot of exemptions, and you haven't grieved your taxes, there's a pretty good chance that your assessment is way too high. And when you're ready to sell your home, you might have a difficult time because your taxes could be a real, detriment to the sale of your home. And then typically
Oh,
what
that's
happens,
real killer.
yeah. And then what happens is the agent needs to, in order, if the taxes are standing in the way, it depends on the real estate market. And this hasn't happened much the last few recent years, but it's certainly happened a lot. I've been doing this for 15 years. So I've seen it very often where if the taxes are too high, then the agent has to start lowering the price of the home to make it more attractive to a buyer. So if there's a homeowner and they have a lot of exemptions, I strongly encourage them to start the grievance process because as we said just a few minutes ago, it takes 12 to 18 months to resolve. If you could then list your home for sale, you'll have a more fair tax bill because your agent has to post the true taxes, not what the homeowner with all the exemption pays. And so, yeah, so it can definitely be a benefit for the future when you're ready to sell for sure.
Okay. All right. So it sounds like the best way a homeowner would be able to find out is honestly by contacting
Yes.
you to find out if the house is overassessed or not.
Right.
Pretty much.
Exactly. Yeah. So, I mean, someone can, send me an email or a text with their property address, and I can usually let them know in a few minutes if there is a case for reduction. I will say, if the homeowner owns a property in Nassau County, it doesn't matter what the calculation is. I'm doing a math calculation based on current tax rates, the assessment values.
Mhm.
Assessment value is something that can change. So the assessed value number doesn't change, as I mentioned earlier, but the calculation that translates that number to the taxable market value, what the town or the county is taxing you at, that number can change from year to year. So that's what I was saying, apply every year. But I will use those numbers to estimate whether or not a property qualifies. In Nassau County, the property might not technically qualify for reduction. I am encouraging all Nassau property owners to apply anyway, because we are very often, almost always, winning reductions in Nassau, even in instances where a property might not appear to qualify. So let's just say you and your neighbor have the exact same home. You both pay $12,000 a year in property taxes, and you're both fairly assessed, but your neighbor grieves and they win a reduction. Who knows why? If the county's giving them out, why wouldn't you take it? So now your neighbor's paying 11,000 and you're paying 12,000. You have an unfair burden of the taxes now because you didn't grieve. You're paying more than you should. And I'll tell you, the tax rates are based on the budgets and everything. So now your neighbor could save $1,000. Their taxes could go up now from 11,000 to 11,200. But now your taxes that were 12,000 now go to 12,500. So you're paying significantly more than your neighbor now because they got a reduced assessment and you didn't. So the message to Nassau County homeowners is apply for a grievance no matter what, and do it before the deadline because it's coming.
Okay. Um, so what are common reasons that property taxes do increase?
Um, there's only, well, so two ways really. First is the tax rates. So typically tax rates on Long Island do tend to increase every year. I know that many, many towns, especially in Suffolk County, recently, their most recent tax bills had some pretty significant increases to some of their tax rates, school taxes. Some towns saw as much as 10% increase, which is significant. Now, that number is multiplied by your assessed value, which is what we argue in a grievance, right? So the lower that number, the lower the impact is going to be on your tax bill. So tax rates are definitely a reason for an increase in taxes. If someone makes an improvement to their property that required a permit, and by the way, now they don't wait for homeowners to get COs anymore. They will absolutely increase your assessment just when you apply for a permit, usually within about 90 days, most of the time. So just be aware of that. So an improvement to the property will increase the assessment. That's really pretty much it. And taxes go up. I have a lot of what you just mentioned, Mo, a few minutes earlier about someone having a lot of exemptions. A homeowner contacted me the other day. They closed in a home this last July, and they all of a sudden saw a huge increase to the tax bill. And what actually happened was the town did not take, even though the homeowner knew what the true taxes were without the exemptions, and they closed with the correct taxes and everything, the town never made the adjustment for the exemptions since last July. The town finally discovered that they had these reductions on their tax bill and billed them back. They will build homeowner back. So it was an $8,000 addition to a already pretty hefty tax bill that they have to pay back. So, my advice is if someone does buy a property and they think that they're getting the exemptions from the previous homeowner and the tax bill is a lot lower than they anticipated, they might think, oh, good, we're getting a tax break right now. Don't take it because it's going to come back and bite you. They're going to bill you back. So,
Wow,
yeah, so it's unfortunate when that happens. And my advice is don't take it. Don't take the cushy low tax bill because it doesn't help, in the long run, it's going to wind up, hurting you, or you're going to have a big bill to pay. So, so typically that's it. There's increases every year because of tax rates. And as I mentioned, they can increase the assessment by 6% a year or 5% over 20 years. And we are seeing Nassau County increase those assessments, generally about 6%. There were a few years that they told the homeowners that they froze the tax assessments. So a lot of homeowners mistakenly believed that meant that their tax bill was not going to go up, that their tax bill was frozen. That is not true. The tax assessment was frozen. So the number that the tax rate was based on did not change. It didn't go up 6% or, so the tax rate still went up. So they still saw increases. So don't be fooled by the language. Tax assessment and tax rate are two different things. So usually, again, it's tax rate increases and improvements to the property that cause increases to the tax bills.
Okay. Do you have a final message for any of the homeowners listening right now?
Yeah, I would just say that everyone should grieve their taxes. Don't be afraid to do it. It can never hurt you. Your taxes can't be raised just because you filed a grievance. There's a lot of homeowners on Long Island that might be nervous about permit issues and things like that. You can absolutely call me and I can work around that for you and let you know if it makes sense for you to qualify or not. Because sometimes if you do have open permits, filing grievance could potentially raise a red flag. Sometimes it's worth it anyway to do it, especially if there's a good savings to be had. So I can advise homeowners on that. But otherwise, don't be afraid to file a grievance. You need to do it before the deadline. There's nothing to lose by trying. And you should grieve every single year because, as I mentioned, homeowners that grieve every year do pay on average 25% less. And just because you don't have a qualified 1 year does not mean that you won't qualify again in the future years.
Actually, you reminded me of something. I had one final question.
Sure.
If somebody files for a tax grievance, does that mean that somebody's going to walk into their house and look at it?
So glad you said that. No one comes to the property. No one from our office, no one from the town, no one from the county. So the answer is no. No one will visit the property because you filed a grievance. So great question.
So the town's not going in with the flashlight looking for an
Correct. They're not coming in. They don't have the time, the manpower. They receive tens of thousands of grievance applications and they only have 90 days to respond. So by the way, for Suffolk County homeowners, I'll mention this. If you've applied for a grievance, two things actually, I'm glad. If you've applied for a grievance, and homeowners can certainly grieve their taxes on their own. I don't recommend it. I hire my own company to grieve my taxes. It's not something that you should do. You certainly can, but if you're a Suffolk County homeowner, you will 100% receive a denial. And that does not mean that you don't have a case. There are further processes that will often result in a reduction, and they do need to file the appeal process. Homeowners in Nassau County, there's a lot of homeowners that are encouraged through various sources, Facebook pages and groups and things like that, that they can grieve their own taxes and they don't have to hire a company and pay someone. They can do it on their own and be successful. In my experience, I've seen this countless times. Homeowners will receive an offer in Nassau County if you apply for grievance on your own. In my experience, and homeowners will be excited. They'll offer to reduce a home's assessment from 500 to $485, and the homeowners say, great. You have to sign a form that says you accept their offer and return it to the county. If you don't return it, you'll get nothing, which is kind of silly. They're admitting that your assessment is high. They're not just giving it to you. You have to legally sign that you're accepting what they give you. And again, from what I've seen, is those offers are usually not even close to what the homeowner actually qualifies for. So this has happened many times. So my advice is don't accept the first offer from Nassau County either. File an appeal or hire a professional tax grievance company to handle the case for you.
Okay. That's great advice. Homeowners, lower your property taxes. And Michelle, thank you so much for all that info.
Yeah. Thanks so much for having me, Mo, and hope we'll talk to you soon.